Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. We'll do the same without wasting a single second of your time. Bada bing, bada boom, we go. Unshaven look today. It is the new year. I'm on vacation, so yeah. Bitcoin got a bit of a rejection off of that 786 diagonal pitch fan we've had price in since January of this year. It's been respecting those levels, so we've kept it there. It's pretty interesting how it does that ascending channel thing. Comes up to that 886, respects that 706, the 786, rejection 706, and hitting up a resistance level here, and we're back at that 706, down at 41,604 for the low on the Binance chart, the Coinbase chart, and we are attempting to hold the line as we drop beneath some levels here, not much below until we reach that 39K region. Do we find some support here and come back above that 42.4 level, or is it sayonara for Bitcoin, at least down into these wicks down below? Let's find out on the liquidity of high block. What is high block? Well, people lock that liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss. And we get to see what those crispy characters are, so let's do it now. So as it came down to here, they came all the way down with that dump. I saw it on a liquidation watch channel. They took a $1.5 million long out here. But first, after coming down over the weekend, let's go ahead and recap. So it got that push up to that liquidity pool that we were looking at. Wait a minute, where was it? Yeah, so the 20, yeah, up here. Okay, so we were looking at some liquidity push. Let's go hold ourselves to the flame. Yesterday, what were we seeing? So yesterday we saw this push up to this region here, basically to this zone, and we called for a short long. Too bad we didn't call the short. We were too busy looking at NQ and working on these assets for a video, but it came to this pool that we were talking about at 43K even. So we're calling for a long to come up to this zone. It took its time and then immediately dumped out of there, stopping us in profits in that long as we were engaged at the time. But basically coming to this zone over here, that band of liquidity up there got eliminated.
Fatality.
And then they came down into the liquidity of the 100xers over here. Let's go ahead and set this to max liquidity. It is set. So this little band of happiness, this $162 million long pool and their brethren induced throughout all of here, was taken out down at that 41.3 region.
Fatality.
And then they V-shaped into some shorts here, 275 million shorts opening up into that support level, and they came back and took those out without hesitation.
Fatality.
And then they basically meandered around, had a little bit more of a sell-off, came back down, found support off of some character down here. What was that? That was, it doesn't say the amount, only 21 million. So that $21 million 100xer that opened up here, they just came and tapped him and then came back up into the shorts after inducing some shorts around here, some little baby shorts. And as we come up into the shorts here, the $60 million character getting eliminated at 42,275, they are inducing some longs as well. And where do we go from here? Do we come back into this $275 million 25x brethren of this reduced to smithereens 150x character or not? Currently we're imbalanced on the 1 minute time frame, 6.4 billion in short liquidity that we could come back into. Are we winding up for a pitch to the upside? Time to expand our vision to the higher time frame pools and see what's up. Shout out to everyone here in the chat. How's everyone doing? What's up, Prehab? How's it going? It's a shame I didn't see that short coming up here. Is it fatigued at that 43K region? Here we go. So going to this zone on the 7-day. So the 7-day took out that band of liquidity down here at 41.5. We still got a little bit more at 41.2 and 41.150, but overall they're getting thick up in that 43 band, priming itself for that 45K hit at some time. When do we go there? How long does it take? Does it wait till New Year's to come up to that region or not? Coming to the monthly, you start to see there is a thick band down at that 39.6 region, which does coincide with that idea on the Coinbase chart that we had on the 786 level, with the daily support levels down here to come down to that daily support. This is the only region that we could SR flip back down here. There is a point of control down at 38.9 that we could basically come over to here and try to basically bounce off this zone for support, perhaps, on that idea. There is a 786 region down in that 41K that we bounced off of. Do we come back for a double bottom confirmation of this idea before coming back up? We did reclaim those guys, so that guy is off the table. There is still a character up here. So this 41.346 is an interesting daily zone. Do we come back into this for a double bottom? That's what we'll be looking for over the course of the structure unfolding, and see if we can make that hit back up. Do we hit break and come down to this 39.6 region, or do we have the strength to muster up to 45K? We will see. It looks like there is that thickness getting primed. It was previously on December 17th 8.9 billion. Now it is up to 13 billion. So 4 billion was induced in this rise up since December 18th. So coming back down to that 4 billion, possibly bouncing off of 39.6 for a order block bounce. Where would that 39.6 be? It would be at the base of this candle. So there is something to be said in this impulse here. If we take this entire impulse to the upside, there is a pocket region down here. So there is something to look at in this band of liquidity down here. Do we have something to get down in that 39.5 region or not in this impulse to the upside here? If you take this as an impulse retrace idea, so if levels to respect, if we were going on a merry path to that 45K and beyond, we would have to come and respect this 236 level at 42.114 for us to be interested in maintaining along. That would be your key zone here, 42.114 as a key interest area, and then that also slates you to come back into those regions. A lot of confluence up in this region here. Okay, so those are some key level areas to look at. And we haven't even gotten into the Momentum Master, so let's go ahead and do that now. Turn on our heads up display and affiliate banners and be your own guru. You don't need anyone. Scroll down to features, toggle at your leisure, and you can see how the structure forms with double bottoms out. You have this 3 drives to the downside, a rocket ship appears, you get a double bottom event, flips the cloud, boom, we're out. We kiss the cloud, confirm, boom, continue out of there. You got all sorts of things to read about. The trend cloud, this is your schematic. This is what you can study for that smooth entries. Trend cloud, baselines, and stochastic array, and more. Dynamic alerts to your phone so you can stay plugged in. And so that's what we would wait for here. We're starting to get 5s and 6s, and we'll show you here as we go deep into the time frame. So it looks like we came down to the 12-hour adaptive moving average here. Think of it as your VWAP. It's a noise reduced thing. You can read about it here, the adaptive MA. It's a sensitive yet stable moving average that factors out noise and displays the accurate place where price will experience resistance or return to for support. So are we trying to SR flip the adaptive? We so far have this cross down event of the baseline on the 12-hour, which is holding, and we also had that on, we were pointing out to you over the course of the week. Since December 15th, we've been flashing this signal of the cross down event of the baseline on the 3-day, and the last time that happened back in July, and how we dumped to the downside there, and then the cross up event had you at hello for this upside play. And this, even with the false signals, did give you, even if you took it here, would have given you a 13% correction at some stage. So the 3-day takes time to percolate. So even if we do come up to that 45k and do something like this, there is something to be noted about this cross down event on the 3-day. Okay, so if we go to the daily time frame, the daily time frame is back at the cloud, holding the cloud as support. This is the first kiss to the cloud since October, really. So we came to October 14th. We had a rocket ship in September and in October, and both of those played out. And there we go. We're back at the cloud for the first time in 2 months. So this is a interesting thing. Can we hold this cloud or not? This 786 at 41,346, this daily support level, needs to hold in some double bottom fashion for us to see some upside. Let's go ahead and go to a lower time frame. Well, first let's look at the oscillator. So the KD lines of the stochastic getting suppressed here. Money flow had a little bit of bearishness. This is around the time we shorted on Sunday and took this down to the downside by Wednesday. So the suppression of the Williams, is it going to keep us going lower or not? That is the question as we remain at the daily cloud. Let's go ahead and go into a lower time frame of the 22. So the 22 meandered around here as it's still making this somewhat curved cloud structure, trend cloud structure here. Are we going to make it above it? And even if we muster the strength to get up to here, are we just going to reject and come down? 22-hour is ambiguous at best on the trend cloud, and you have that cross down event on the 12 and the 22 that is still playing out. If you look at this Williams suppression, we're also getting the money flow beneath the RSI, suggestive of some play to the upside at one point, although we have already gotten quite a decent play off of that wickage, 2.42% of that liquidity. Let's go to the 12-hour. 12-hour cloud cross down, baseline cross down event is still in play, and we are beneath the cloud and the 236 level of that impulse retrace. Can we reclaim this 42.1 idea or not? That is the question. Chances are we reject, come down, reclaim the wick, and try to find some actual support, and the patience will pay. Hopefully by tomorrow on Sunday, or the weekly candle close. Does the weekly close bearish or bullish? That is the question. It is December 30th, Saturday, nearly becoming the 31st on Japan time here in Tokyo area. So if we go to the 6-hour, the 6-hour money flow has this disparity between the money flow and the RSI. We talk about this disparity, and this can be expressed as fatigue. So this comes into the idea of creating this double bottom, and coming back down if this dumps back down on us. So does it do that on the 6 hour or not is the question. And this KD line crossing back down and dumping further to the downside. The MACD down in the Williams domain has yet to cross up, so we could see this continue to reach bottom out levels on the leading MACD. Cross down event is still in play, just like the cross down on the 12 and the 22. So we are not in the pocket just yet. Coming to the 4 hour. 4 hour coming down to some adaptive moving average levels and wicking down, wicking down, wicking down, and getting bought back up in here. Do we come down and reclaim that wick or not on that higher time frame at that 786 for a double tap? That would be cool to see. Cloud is still bearish. You have this tonality of pointing to the 5 o'clock angle not starting to curve and abate just yet. So we will see how that goes. We are oversold on the 4 hour and we are starting to reclaim the baselines though. So that is interesting to note. Are we going to see a closed in cross up event of the 4 hour in the next hour and 39 minutes? Money flow is above is below the RSI, suggestive of a move to the upside. Now in the last 1, 2, 3, 4, 5, 6 hours, we've seen this buyback of this dump down here to that 41,359 region. And we've had this daily support line there for some time. So this is not changed. This has all been in the charts. These are these key levels that we bounce off of are key levels for a reason. We don't edit them every time. We don't need to, because we're not making stuff up here. And then as we see on the 1 hour cloud time frame, this cloud is mighty thick and we're respecting this bearish super trend to the downside. So as long as we respect this, the idea of rejecting and coming for that double bottom idea could be in the cards. The hourly time frame, as you see by the Stoke here, it says 100. It's maxed out. So we had this bullish divergence form as we came up here. If you were scalping, you could have been privy to these sixes on your phone, getting alerted to this 6 as we drop down here. Watch that 786 bounce and take it up. I was working on some assets in Illustrator. I have an idea percolating for a video on order flow, which we will be releasing hopefully by the new year time. So I didn't catch this, but this would have been a good high probability setup, but it did give it back promptly only to come back up again. They're playing some shenanigans over the sell-off of the New Year's time as people take their profits. So the double bottom confirmation will be something to see, and we have yet to recover this wick. So I'd like to see how we react off of this 786 for a double tap. It looks like we could be fading off of this level. We do have a fair value gap in this region. Once again, if you don't know how to find fair value gaps, there is a free tool to help your eye get trained called Fractal Break Imbalance Fair Value Gap Liquidity Void. You can turn it on and it'll put it there just where they all appear, and you can learn how the wicks get calculated from the candle to the right and the candle to the left, and that gap there is your fair value gap. So looking for the candle to the left of the candle with the acceleration shows that it was traded unfairly. So there is a gap of imbalance there. And order flow, when we make that video about order flow, we'll talk about what's happening inside of that candle, and that will be a very informative video, hopefully for you guys out there in YouTube world. So if we come back to this could come to 50% of this level and reject back on down. If we measure this and do equilibrium here, if we come up to that level and reject, then we could basically come back down to the downside when we come up to that point. Okay, actually I should measure it from that point actually here. Okay, so if we come up to that point and reject, and then we could be coming back to double double bottom. So let's put this over here. Looks like we're having it happen right now though, off the cloud and the bearish super trend level, saying that we could come back to this at a later juncture, but we'll leave it up until it's reclaimed. And if we go to a further level down here on the 15-minute cloud, getting some bearish divergence, hidden bearish on the money flow. Are we going to see that reclaimed? We had a previous rise up here. Let's go and apply the liquidity to what's happening in the charts now, coming back to high block. So we came back into some levels here, taking out 60 million in 50xers while inducing some longs here. It looks like they could clear the band up here. There's a thick pool up in this region at 42,432. If we come all the way up there, or did we over leverage ourselves with these 100xers and they're just coming back to get these guys now? So these 38 million and 19 million and 39 million, ooh, they're coming back with the fury to those 100xers. They're not too pleased with these breakout traders that opened up here. And these guys that opened into resistance are what you would call neophyte traders, because they are just jumping on green candles like it's support without understanding these concepts. So on the 5-minute, how would you have been able to scalp this? Let's just go back in time. Now, if you saw this wick and then we were coming down into this wick and you were starting to see us come up here, what you could have done, you have this retracement tool. You could have put this from the impulse to the upside and then switch this over to your pocket regions. We came down into a 706 pocket, we held it, and you could have pulled the trigger off of a baseline cross inside of this during the London session. And so this is having your ranges for you: Asia, London, New York. And then if you were so inclined to scalp, which you should be enjoying time with your family anyway, but you could have easily taken that up if you watch this pocket maintain itself. This is also a 706 on another fib level, so you have double confirmation of that. And then we came up. So we have yet to see a structure shift. We're just trading within a range here. We're range bound. How you can test that is you use a regression trend. Using your regression trend tools over here on lines, you go down to regression trend, you favorite this and favorite parallel channel, and with 2 clicks you can get a channel to form and see that you're kind of staying within those confines. You can use the parallel tool to do the same thing. If you are good at seeing it with your eye, you could put those in that channel as well. Channels are about the only thing that are worth drawing lines on your chart, or paths, projections for the future, but the patterns will shift and undulate with the liquidity, so don't get locked into a pattern of thought. Pardon the pun. So if you watch here, it's getting rejected off of the adaptive on the 5-minute. It looks like we are getting gassed on the 15 and the hourly. So watching this rejection possible come back down to the cloud here and push up to the fair value gap, ultimately looking to see a recovery of this wick at 41.3 for a little bit more confirmation of this play. Coming down into this region would be nice, and seeing how the 41.3 holds or not. If you're looking for a higher probability short opportunity, if it continues higher from here up to that 42.568, then that could be a higher probability short down to that level. But other than that, where it's at right now, I mean, as it stands on the hourly, the cloud rejection seems like the likelier option, but it's not at a key place to disguise my entry for a short, so I'm not interested in taking it here. But that's where I'm seeing things right now. Let's go to the broader markets, shall we? Whoa, I didn't want to grab that. I wanted to grab this guy. So let's go to the broader markets of total. And total 3 coming down, holding this daily support range. Alts stronger than Bitcoin. The alts are trying to reposition back into their positions to possibly come up again. It looks like they're stronger in holding this range, this key zone, key level, whatever you want to call it, that we were projecting out into the future from here. This daily support and resistance level we are trying to flip into support. Overall, the 12-hour on the alts has this cross down event to contend with, and if we go to the 6-hour, we're back at that cloud on the 6. So do we see a little bit more upside from here? We do have a gap to recover up in this region, so seeing a bounce in the alts could be underway. We're getting from that rocket ship that appeared for the USDT dominance. It did not go lower to that. It went to the 706 level and started to bounce out, knocking people into USDT. But the USDT has been inserted, reinserted, knocked out. It hasn't been going higher, so it could be coming for a lower stab at some point. The fake out dump. Until you can get above this 236, you are bearish in nature for that, for this USDT dominance, and the bearishness of the USDT dominance is bullish for the markets. So coming to that level, wait, what got adjusted there? So possibly coming to that 536 at some point. We're keeping an eye on it. It is rejecting off of this 12-hour cloud here, and the cloud is not curving anymore. It's kind of curving to the downside, as if to say it's going to open up and reject here and come even lower to this region. So this is the story of the USDT dominance, ultimately getting overextended on the USDT insertion, so possibly getting a shift in the structure over time soon. Going to the BTC dominance, we are looking at BTC dominance coming up. If it's coming up off of this 618 pocket region that we were talking about, we're getting a bounce off that 618 on the 12-hour cross-up event here. So this 12-hour cross-up is playing out, but ultimately seeing this come down for a double bottom, possibly giving the alts a little bit more of a rally at some stage. And total holding this 12-hour cloud, we got a kiss to it. Do we come up to this pocket up here and try to go a little bit harder in the billions up to this region before rejecting, giving that 45k bounce idea a reality? All right, let's go see what the chat is and then go into, hey, what's up, Meluo? If anyone has anything they want to request. Okay. We'll give you a moment to request it. So these 0.27, this impulse here, the deviation path of the 618 bounce could take you up anywhere between the 42,448 to 42,762, which recovers that entire fair value gap. Now if you respect the gap and are intending to come lower, you would come to that 42.5, no higher than that 42.568, and reject and come back lower. Are we getting this rejection from this region here at the cloud? We couldn't even muster the strength to go up. This 236 is the level of bullishness we need to respect. So if they're saying not just yet, mister, let's go back down and double bottom, let's confirm this liquidity or neutralize the targets we're aiming at first, that could be what is on the chopping block right here. They do have this attempt to take out that 39.6, so we are aware of the liquidity draw potential being to the downside. You do have a thicker band down here in this 162 million at 41.164 that has yet to be reclaimed. 41.164 would put you into this candle here, right there. So there is some $164 million character inside that 41.164, just under that 786. So we are patiently awaiting for that potential grab of liquidity before coming to the upside. So ultimately still bearish in tonality, but getting to the precipice of a potential long. We're on the sidelines with ammunition and waiting patiently. Not the time to enter for either side right now, in my humble opinion, but you do you. As it stands right now, the hourly is overbought and is looking to reject here in the next 25 minutes. If it closes beneath that 236, we'll see more downside draw. Even if we get up to here and reject, more downside draw. So these are your key informations, and that's my story, and I'm sticking to it. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you on